In this video, I will be speaking about Euro USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. We will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a very strong area of monthly demand and support. In fact, from here, all this previous rejection to the upside was created. Again, here the market tested its zone and rejected it to the upside. Again here, and again here. And at the moment, we can see how the market has just tested this zone. It already started rejecting it to the upside, and we could expect more bullish price action to be created away from this area. Now, if we drop down on the weekly time frame, we can see how from a weekly perspective, the market is currently trying to break above this quite strong previous weekly resistance, which is now turned support. Now, as the market is testing this zone as support, we could expect a potential rejection away from this area to the upside. So bullish price action could potentially be created away from this area. Going down on the daily, we can see how from a daily perspective, there are two very important things that we have to keep in mind. The first one is that the market at the moment is testing exactly the previous daily resistance, which is turned support. In fact, from here, this previous rejection to the downside was created, which is now turned support. And at the same time, if we take our Fibonacci on this impulse, so from the low to the high, we can see how we have a perfect 0.5 and 0.618 Fibonacci retracements lining up at this area that we could expect this market to test and then to potentially reject to the upside. So in a situation like this, considering that at the moment the market is testing this confluence of support as we have previously identified, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for a potential rejection to the upside for the market to potentially complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.